If you're given this chart, what are the steps you start with? The correct answer is analyzing the play between the external structure with the internal structure. But they're hiding it. They're not talking about this play, and only about support and resistance, but without a proper market analysis, which you will see in this video. So let's get started. During a downtrend, we see swing formations of lower highs with lower lows, and this movement keeps repeating. Logically, when you would look at this chart and you look to trade with the trend, you would be interested to sell at the highest price you can, and that's usually on a supply or resistance at the swing highs. So you know it, and you start placing the sell position right on the supply, with the stop loss above the highs, and take profit you're looking to target the swing lows. Because of course, as we know, if we're trading with the trend, and the trend is a downtrend, well then we would expect a lower low to form if we're looking towards trend continuation. But what you would find that actually happens a lot of times is that it first opens your trade, and right after it goes in your direction for a short period of time. But then it reverses back up, breaking the recent highs and stopping you out of the trade. We've done a huge mistake. The mistake was not waiting for the internal trend shift to happen. So let's explain how this works. So we have the external moves, which are basically just the straight down and straight up movements. But these moves are formed from internal trends. For example, inside this large downwards push, we have a downtrend formation of lower highs and lower lows. And at some point, inside this internal downtrend, the last high finally breaks to the upside, which eventually flips the internal downtrend into an internal uptrend, which is seen with higher highs and higher lows. And this entire move is actually seen as a pullback. But the main trend is still bearish, so at some point, the last low must break down. And this in itself is again an internal shift, but this time from an internal uptrend into an internal downtrend. This recently formed internal downtrend follows multiple lower highs and lower lows, which on the external main trend simply looks like a straight downwards push. And this price movement breaks below the last external low, so this forms an external break of structure. Now after an external break, basically a high time frame break of a swing level, a pullback should happen. And a high time frame external pullback during a downtrend is a high time frame pullback. And a high time frame pullback during a downtrend is an internal uptrend that happens when the last internal high breaks to the upside and the market follows with multiple internal higher highs and multiple internal higher lows, which is what is seen on the external uptrend as just a straight upwards movement. And now this movement has filled the supply. And the mistake was that we placed a sell short position without having the internal break of the past low. So to validate that this high time frame supply is high quality and can hold this downtrend, we need to see the price react down and first break the past internal low. It's only at this point where we consider to sell this market down from this high time frame supply resistance, or from an internal supply resistance if you want a higher risk-reward ratio. This process of using high time frame supplies just to validate a low time frame supply is called refinement. It allows a tighter stop loss and a wider take profit target. We'll see during the upcoming live trades if we can apply this concept. But before that, we also need to talk about how this works in case where a market is in an uptrend. During uptrends, the external move is a straight push to the upside, followed with a downwards pullback. The main characteristic is that the market forms repeated higher highs with higher lows. Now inside of the upwards move on the external uptrend is the internal uptrend, which is formed with multiple internal higher highs and internal higher lows. When the past low breaks down, it shifts into an internal downtrend. But this internal downtrend is really just a pullback of the external uptrend, and the pullback ends when the past high breaks to the upside, forming an internal higher high, which continues and aligns the external trend with the internal trend, both moving to the upside. Now on external uptrends, we pretty much don't want the past external low to break down, because that would reverse the trend into a downtrend. And if we're trading with the trend, we usually look for demand or support levels. These levels are taken from the external trend. But once again, we do not place the buy-long position right at the touch of the zone, because at this point we don't even know if this has a higher chance of respecting or breaking. And it's only at that point where we can buy this external demand on the next pullback, or look for an internal demand if we're looking for a refined setup. And now let's jump into the charts. On this market, we are on the 4-hour chart, and we start by doing a quick analysis of how the external high time frame structure is moving. And the external structure is forming swing higher highs with swing higher lows, or it has formed this way up until this level, where the market started failing to break the past high and instead the swing high was lower than past high, so basically a lower high formation on the swing levels. This shows weakness of buyers and an increase of selling pressure, which eventually led to a break of the past swing low, forming an external swing lower low. So if we combine both, a lower high with a lower low, they are simply the fundamental movements of a downtrend. The uptrend shifts into a downtrend once the market breaks below the previous low. And during downtrends, you will often see how the price moves towards supply and resistance levels, just to reject back down and follow into a lower low, which is what actually happened recently. And after a major break, such as a break of structure or a trend shift, you should be expecting the market to pull back. And a pullback during a downtrend is an internal uptrend. It's internal only because it looks towards filling a supply or resistance level, from where the market has a high probability of moving away from it after filling the level. It's basically a repetition of what happened previously, because that's simply just how a downtrend looks like. Now we need to pay close attention to this pullback. Seen as an external move, this would look like a straight push to the upside. But inside the external structure, we also have the internal one, which is seen with multiple formations of an internal uptrend. Look here, an upwards push, a pullback, and a break of the previous high. This break forms a bullish break of structure, and more specifically, an internal break. And an internal break validates an internal demand or support level that we can see that later did not fill, because the market pulled back down higher than the demand level. So basically the market did not give an opportunity for a setup. And this actually happens most of the times, but with this way of deeply analyzing the market, you will eventually spot the highest quality setups, and you can also master this type of market analysis. Especially my team of traders learn not only how to spot these concepts, but also how to take advantage of any opportunity. I will leave a link in the description for you to see if you're interested. But now, let's jump right back into analyzing this market to the T, until we find a setup with huge potential. The market pushed higher, breaking the past high, so validating another internal break of structure. A break of structure validates in itself a demand or support level, from where we can see lately how the price action is forming a small internal downtrend, basically pushing downwards, pulling back to the upside but without breaking the past high, forming a lower high. And the most recent move is a downwards push, usually to continue the internal downtrend. But that didn't happen yet, so we need to wait and see the upcoming price action so we can react accordingly. However, that's the most likely scenario to happen since the price is already very close to breaking the low. And it's what happened on the next candles. So it broke the past internal low, validating an internal shift from an uptrend into a downtrend. But this trend is only on this price action, and not on the larger trend. So if this smaller price action structure is in a downtrend, on downtrends we sell the supply zones and the resistances. That is the most recent supply zone. And there was also the first one here. However, the first one was not valid because it formed before the trend shift. Keep in mind that for a supply to be valid, it needs to happen after the internal trend shifts from an uptrend into a downtrend. But the first supply has shown us that supply zones are starting to respect, since the market has filled the first supply and rejected back down into breaking the past low. But now the question is, what do we do with this demand? Because the market can just as well bounce back from this demand. Well, the thing is that this demand is more external than the supply. This entire price action is bullish, but this price action is bearish. So here we have two options. We can buy long this demand as a swing trade, and the exit level being at the external supply, or we can sell short the internal supply, but with the stop loss right above the past internal high, and take profit right below the previous current low, which is still on the demand, and this way we don't invalidate the demand, because we don't plan ahead of the demand breaking down. And one extra way of increasing the setup quality is refining the setup. That means that we're going to zoom into a lower time frame, for example the 5 minutes one, and we're going to analyze the internal trend and look for setup opportunities right there. For example, the internal trend here is bearish, formed with multiple lower highs and lower lows. But then the price breaks above the previous high, just like it's seen right here, that it formed the first internal higher high. Basically a bounce from the external demand, just like we've seen in the first minutes of the video. This break is an internal market structure shift, which reverses the internal downtrend into an internal uptrend. On internal uptrends, we look for internal demand zones and support levels, since the probability is for the market to fill these levels and bounce to the upside from them. So now we can plan the setup. With the buy position on this internal demand, stop loss below the recent lows, and for the take profit we need to look for levels that make sense, For example, previous internal highs that should be liquidated and broken to the upside, especially considering that the market has recently entered into an internal uptrend. And there are many of these liquidity levels, with the most important one being the supply and resistance from above, and we can target each of these levels. However, if the risk-reward ratio gets way too high, I wouldn't be so greedy. For example here, targeting the second liquidity levels is perfectly fine, gives a high enough risk-reward ratio, but without being way too extreme. And now we need patience. Here the position gets opened, with an instant bullish reaction, which eventually leads to move into the take profit level. So this was the first high-quality setup. Now we can look what happened after. So far a small pullback, and looks like a continuation towards the supply, from where the price quickly rejects back down right after filling the supply. Now what we analyzed was the external move, but on the internal move, we see here an uptrend, and then a break of the past low, from where the next move was a high that failed to break the previous high. So it formed a lower high, and again a lower low. So having formed a lower high, with multiple lower lows, we would expect an upside pullback to form another lower high, as rejection to the downside into forming a lower low. And this action to keep forming for a while. So now that we know that this has flipped into an internal downtrend, on internal downtrends we sell short from supply levels, from where the more significant supply in this price action should be around this level that it even has hit right here, and it can hit once again. As long as it doesn't break, it's still a valid zone. So now we position the setup, a selling position, with the stop loss above the highs, which also coincide with being right above the internal supply. And the take profit must also be placed with logic behind it. The most logical exit would be on the external demand, or below this internal low, depending on your risk tolerance, but so far I'll keep it the initial way, on the demand. And now we have patience. Position got filled, and the next couple candles hold a bearish momentum, eventually breaking down below the recently formed low into a lower low. Here we have a pullback to the upside. It was so close to getting stopped out, but glad it didn't happen, and the market actually pushed far lower after, constantly having formed lower lows and having this downside pressure. And finally it moves into the demand, which closes the trade with a second winning position in this market. Now notice where the market started to bounce again, because if you look on the left, the bounce actually happened from a demand level, if you pay close attention. And not only from the high time frame or external demand, but from an internal one as well. So now what might actually happen is a break towards this internal high, just to flip the low time frame trend into an uptrend once again. But this low time frame uptrend should fade, because the higher time frame is bearish, having formed multiple lower lows that rejected back from a supply. A high probability scenario is a push towards a new supply, which would eventually react and move away from it into possibly a swing lower low. I'm not going to get into more detail in this video to not make it too long, but if you're looking to properly learn trading the right way so you become profitable with this complex yet simple to understand system, feel free to take a look at the link in the description, and see you on the next video.